Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, September 9th at about 1:30 p.m. Eastern Time. Well, Wall Street's main indexes are rising so far today, boosted by technology and high growth stocks as investors await key inflation data next week to gauge the pace of interest rate hikes by the Federal Reserve. And of course, we're all watching that. Let's go on to three charts that could give us some insight into the week to come. Now, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. And we follow the S&P 500 because it's kind of a guide or the mood and manner of the market that we want to watch, because many of our stocks will follow the S&P 500 and where it goes. Now, when I captured this chart today, the SPY was trading at $406.39, or about 40.63 on the S&P 500 itself. Now, we know that since back here in January, the first part of the year, that was the closing high, the all-time closing high back in January 3rd at $477.71. And so we know that during this year, the SPY, after the first of the year, the markets fell down pretty dramatically here, made a low in February, popped up in March, then rolled back over, fell back down again through the black line, the 200-day moving average, the red line, the 20-day, and the green line, the 50-day moving average. And the market kept falling lower and lower and lower and didn't stop, at least till now. It didn't stop until it made these June lows down here at $362, right here where you see the little red low down here. Then our benchmark rallied up to 393, then came back, made a higher low here at 371. And as we know, higher lows are a good thing. That means buyers are coming in before price can come back down and retest at the prior low. So that's always a positive thing when we see higher lows. Then, of course, price has to move up and get up and over to remain bullish the prior price resistance or the prior highs that price made, these pivot points, and it did that. And the SPY marched right up very, very nicely, marched right up in a very, very nice uptrend here. Only thing that was, not that you couldn't make money, because a lot of people did and have, only thing we want to watch here is a general idea here is that when price, whether it's an index or a stock, moves up this dramatically at this steep of an angle, it usually isn't sustainable forever and ever. For a more sustainable uptrend that goes longer, you want to look, and I'm not going to draw it here and mess up the chart, but you want about a 45-degree angle. So while this was tons of fun and fun to make money in and certainly look bullish, had it been at a less steep, maybe where the 20-day moving average is here, at a less steep angle, we would have seen it as being more let's say durable, because we know there's going to be profit taking at some point. It's just the way it goes. So at any rate, from this 260 or 362 low down here, the market, the SPY, finally made it back up to, I think, about 431 here. It made it up to the 200-day moving average. Now, this black line, this 200-day, can be a really tough dude, especially if it's moving down overhead over price. Price went up, and we talked about it at the time, said, can it get over the 200-day? It could not. Bumped its head on it and fell right back down. Fell back down here to down to 388 on September the 6th. So that was just a few days ago. So now we've got this 388 low. And we also talked before, technically, about this little shallow head and shoulders here. And if this head and shoulders would play out as a top reversal pattern, if it would play out where it would go, and the measurement took us down to about 390, you measure from the shoulder to the top of the head, and then take that number and subtract it from the so-called neckline. And for a point or two, this came down very accurately to where we thought it might, down to 390, and that was, of course, prior price support back here in July. So then it it bounced up for the next 3 days, including today, and again, right now is trading at $406 and change. So we're going to have to see September is usually a pretty choppy month. It can be volatile, as they say. And please know that volatile doesn't just mean down or ugly or cranky. Volatile means price can move up and down pretty dramatically and kind of catch us unawares sometimes. So we have had this relief rally, if you want to call it that. We're up to 406. So our next question is, can in the coming week, and with all we have going on with inflation and interest rates, can the SPY stay above this key price level, is 390? Can it stay above that, or can it move back up over the 20-day at 410, back up to the 200-day? Or is it going to, we have earnings coming up pretty soon. We're running into the end of the third quarter here in September. Or is price going to, is the S&P going to come back down and fall below that 390? And of course, if it does, I'm going to get a lot more defensive. Our next chart today is in a chart of the Invesco QQQ, symbol QQQ. Of course, it is a daily chart, and the QQQ follows the NASDAQ 100, which is the top non-financial stocks in the NASDAQ composite or NASDAQ stock market. Now, when I captured this chart today, the Qs were trading at $306.91. This is about 24% below the all-time closing high, which was way back in November at 403. So we're still in bear market territory here. Whenever you're below 20% below an all-time high, you're in a bear market territory. However, we've had a little bit of relief lately after that June low. Now, the June low was down here at 269. That took it, pretty far below into a bear market. Then it rallied up to 294, fell back down to 296, making higher lows again. That's always a good thing. Then it rallied to 334. Could not get to its 200-day moving average. The QQQ could not get all the way back up like the SPY did. It rallied to $334 on August 16th. Then, as you know, we started south again, broke below the 20-day, broke below the 50-day, and fell to its lows down here to 290 on September 6th, right down here to 290. Yes, that's prior support. Yes, that measures out perfectly for this little shallow S&P, head and shoulders. Yes, it did move down to the price target, actually a little below where the head and shoulders would go. Trying to rally up now. Today, trying to close above the 50-day moving average, which is coming in at $306.55. So what we have to watch here in the coming week, we've got this line in the sand here. For me, is at 290. Right here, 290. This is our line in the sand. Of course, we're going to watch this June low, but quick prayer to the trading god that we don't get back down there again. So let's see, can price here on the Qs hold at 290 and move back up and move over the 20-day in the coming weeks? Or do we need to keep an eye on this 290, and if price comes down, I at least for one, will be more conservative. Okay, our final chart today is a chart we haven't looked at in a while. This is a daily chart of the Global X FinTech ETF, symbol FINX. It has 66 holdings, including PayPal, Fiserv, Block Incorporated, Intuit, and Fidelity National are some of its top holdings. Now, this is a relatively young ETF. It was initiated in September 2016 at about $15. Then over the span of 2016 to present day, it rose to, you can't see it on this chart, of course, it rose to highs in November 2021. It rose up to $53. Now, that was pretty amazing, way up to $53. If you look at a long time chart of this, you will see that actually from 2016 to now, you will see that, and this is just a kind of a crazy drawing here, but you will see that the FINX has actually made a complete cycle. And so that's kind of interesting. Now, during those years, when it fell, every time it fell, it would find support right at the $20 range. It certainly did that 3 times in a row over the years. And again, most recently down here in June, in the June you can see right here. Let's see, where's our low here? Yeah, our lows are right here at June at $20.86. Now, since then, it's consolidated, and it's come down here. It built a triangle. It broke out of the triangle above the 20-day, above the 50-day, and has gradually moved up here. Speaking of looking for more of a 45-degree angle, it actually moved up here to the August highs at about $27. So this is kind of a bottom fishing stock for me right now, or a bottom fishing ETF, I should say. So that's what I'm looking for. I'm staying in the more conservative ones right now because, again, September can get pretty wobbly, pretty cranky sometimes. So it may go up. If so, fine. This is conservative. So it looks to me like, if you back up a little bit here, it looks like the FinTech ETF, the FinX, is building a base here, a slow but easy base, moving up and then back down, making a higher low here, and then moving back up again to, when I captured this chart today, it was trading at $24.53. So in the coming week, if the market stays reasonably positive, and if the FINX stays above 2250, I will add shares of that ETF to my trading portfolio with my initial stop is tight here. It's at 2225. And then if the FinTech can come up and move up, if and when it can do that, and if it can stay above 27 for 3 consecutive closes, I will probably add to my position. So you may want to keep an eye on the FINX in the coming week. And now, please know that in September, when the market can get good and choppy, it's a great time to take some time and invest in yourself. Take a few minutes to check out my online training programs and see how you can become a better trader. Our programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, a great knowledge to have right now, how to trade the trend to profits, and how to read charts for the newbies or beginners. 3 winning setups is fantastic, short, brief, and to the point. And Bottom Fish Like a Pro right now is going to be an invaluable bunch of knowledge to have. These programs are timeless, and they can help you increase your gains quickly and easily. To see all of my online trainings, simply go to the link on this screen, or easier still, click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.